The next phase lokutabe sokungikwakha ke le mall sina silitiko ka commerce wethu umsebenzi kulokuthi support le investment ngoba it's a private sector investment le lathi live emalikhuluma nabo bavuma ukuthi noma bafuna kwakha le mall kepha ngemali yabo batawuphinze basisite ku-improve infrastructure lesinayo lokufaka ikhathi ku-improve i-bus rank yethu lokho ke kwenta lokho ukuthi bekunene vele sibabambise sonke ngoba uma abantu bangaticabangela bona bodvana but bacabangela nelive nalabo mhlawumbe la batawufike baphindze basebenze nabo kuyasibida lokuthi sibabambise.
In the same vein, during the presentation, the Minister for Housing and Urban Development, Honorable Apollo Mapalala, said they will work with the Minister for Commerce, Industry and Trade to ensure that the project of rehabilitating the Manzini main bus rank is completed on time.
Operations have really been mutual and the and siyakufisa lokho sihlale sikhuluma na PS lapha etikweni lokho ukuthi we do want to pursue a siloless government. Hulumende lode emakamelo but hulumende lo operator as one. So lokho nje induna ya commerce le kusho ukukhulumisana nekucocisana but le tinto ngalokuthi tiyathelelana bese lokuhle sihlangana sibonana, you know, it really does help. Asibonge mhlonishwa lokuthi nanani phumela ngaphandle niyofuna investments njengoba ne mandate lenjalo nithole ma credible investors that will also, you know, lend a hand in Zabenia infrastructure development for the country.
The Manzini Municipal Council has unpacked how public transport will operate as the development of the Manzini main bus rank kicks off. The project will cost around 124 million emalangeni.
Ma-temporary locations lesitawenda nyalo lokwakhiwa le rank sitaba nema-sites lamathathu la sitabe sisebenzela kulo. I-site yekucala yala kujume khona ukuthi kuse-Old Trade Fair lapho sithi kutabe kusebenzela khona labaqhamuka e-West lenkathi entshonalanga labathinta robot laseNazarene bona batabe behla straight ngalo ematrix we-robot laseNazarene batongena Old Trade Fair. Bese linye site lesitaba nalo lase-satellite bus rank ngicantla abaningi bayayathi i-satellite bus rank ukuthi kuphi iyona itabe i-service abase east short empumalanga labaqhamuka kubosteki direction. Lenye site yesithathu iyona sibolekwe nge-Riverstone Mall indzawo parking yakhe itawusebenzisa yona ke itawusebenzisa by-cross border cishe bonke be-cross border basebenza kamanzini batawusebenzela lapha. Ama-accesses kamanje ukuthi ufika njani kuleto tindzawo kulabo labaqhamuka ngase-ntshonalanga bese ngichaze bahamba straight but there is an alternative route labangayisebenzisa kuhamba ngasemavuso bagege bese bayojoyina ngasemangwaneni babuye bangene edolobheni lokho kutawusita kakhulu kade letikolo lokukhanza ukuthi dinga along le route leyo bahambe badrop abantwana bese labaqhamuka e-east le-state direction bona batazi basuka interchange yethu bete traffic circle bangene ngaNkosi ehlaza street mabefika eLchaga bajikele ngesancele Chaga flat bathatha i-right bengce ema-poison bengce emakethe yethu bayongena satellite but mase baphuma sibone ukuthi le route le abangene ngayo itaba likhulu ukuthi baphenze baphume ngayo sibone ukuthi mabaphuma baphume baconze eBosco bagudle khona eBosco bengce kule township yethu lensha lokuthiwa ngumkhosi bahambe baze bawachamukela eTulu kule interchange cele kwala kuhlala khona RA that will be their exit cishe ikanjalo le arrangement.
And that is your business brief. After the break, we'll speak to in-house economist Sanele Sibia. Stick around. This is Market View.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@escom.org.za. For more information, visit www.escom.org.za.
Welcome back and moving on with the program. Last week, the Central Bank of Eswatini announced the intention to buy gold from local companies to boost the country's gross official reserves. In his annual monetary policy statement address a month ago, the governor, Dr. Philip Nisi, revealed that the bank currently holds 2,500 ounces of gold, equivalent to 195 million emalangeni, as part of its reserve assets. But what does having gold in reserves mean for the economy? How will this boost the local mining industry? Economist Anele Sibia joins us to unpack this latest development by the central bank. Mr. Sibia, good afternoon. Always a pleasure talking to you. So I did read up on a report by the World Gold Council, and it reports that the Federal Reserve, the European Central Bank, ECB, and many other central banks, especially across Europe, do hold a large portion of the world's monetary gold. Care to educate us on this part? Why do central banks really hold gold as part of their reserve assets?
Thank you, Notsile. So gold is one of the most stable metals that there is, in the monetary system. So it provides a diversification of the reserve. So that is why most foreign banks would want to keep gold in their reserve portfolio to ensure that when you have these issues of currency devaluations and revaluations, and when you come into periods such as these ones of extreme volatility in terms of the vehicle currencies, then when you have gold, now that somehow acts as an anchor against inflation and also as an anchor against quick eroding value as one looks at the volatility that we are seeing actually at this current period now. That is a good case in point where we are looking at the volatility, and we are seeing volatility in real time in the markets. And now when you don't have any other anchor or a diversified reserve portfolio, then you tend to be a bit more exposed to such movements and such shifts and such shocks in the geopolitical tensions and overall in the geopolitical world.
Right. Back to this development by the central bank. As we know, it currently holds 2,500 ounces of gold, amounting to 195 million emalangeni. Given the plans or the new announcement to increase gold holdings by purchasing gold from especially or specifically local companies, how significant is this development?
So on its own, number one, I would believe it's a good step for the economy, in the sense that before gold can be held in reserves, it must meet a certain purity standard and it must meet a certain international standard. So now that means we are going to see a bit more of some beneficiation in the kingdom, where we are seeing gold not just being extracted but also being purified and then sold to the central bank. Now that would be one of the avenues that we'll be looking into. So now you are seeing a diversification in the local market. And when you are buying it in Emalangeni, that also anchors, the strength and takes away the volatilities that we're talking about in terms of foreign exchange, where you'd have to then go and still change money to get the gold. So now it makes it a bit easier, but we're also seeing a bit of more integration in the mining value chain, where the miners are going to also be selling the gold. So now there also acts as an impetus for the producers to start refining the gold and purifying it here domestically, so that it meets those standards or those international standards, wherein it can be referred to as a reserve metal. It has to meet a certain level of purity. And then secondly, you might want to also look at if the central bank buys from local businesses, this could also be in an instance where local business begins to import the gold and it comes into Eswatini, and then the central bank buys it from Eswatini. So now from the producers in Eswatini. So now that is also going to be another avenue for strengthening and diversifying our import base, where we are now going to see a huge rise in those imports in terms of gold coming into the kingdom. And now that works. It works in favor of the Lilangeni in terms of maintaining the stability of the currency, while also just hedging inflation fears and making sure that the central bank has quite a lot of reserve options, rather than just focusing on currency, which at this point in time is very much volatile. And so when you look forward and look ahead, we are seeing more room for growth within the miners, beyond just extracting to also refining and purifying domestically. So we are seeing this is a good impetus that can be utilized to actually grow the local beneficiation of our minerals.
Besides gold, Mrs. Beer, which we know is a safe haven asset, which other precious metals you would advise the Central Bank of Eswatini to look into?
Thank you, Notsile. I think the main issue is with the acceptability that you would want the central bank to maintain. So usually gold is one of those very big type of minerals that you would want to hold there. And then when it comes to other minerals, we are worried about the issue with what we've been seeing happening, more especially with diamonds. Ideally, before you would want to also hold diamonds, but with what we are seeing with synthetic diamonds, then that becomes a bit of an issue, where you are seeing the market really becoming volatile, and we are still seeing lab-produced diamonds coming into the play and really just affecting that entire market. So right now, in terms of those precious minerals, and when we are talking of a reserve current, as reserves, then gold becomes one of the most acceptable minerals that you can use as a country, compared to really just trying to cover all minerals that are there. And in terms of the banking standard, remember when the banking system transitioned, we started from the gold standard, and then we came into the fiat money, our money that was not backed by gold. Now that's because gold is one of the currencies that holds value, and therefore if you have that gold within your reserve portfolio, then you've diversified your reserves and you are at a relatively stronger footing, and it is internationally accepted as a reserve commodity.
Mr. Spear, you have highlighted the plentiful benefits that await here for especially local businesses or local miners. As per the annual monetary policy statement, the central bank's reserves reached a peak of 15.5 billion Malangeni in November of 2025. Does this create a favorable environment for the bank to diversify into gold right now?
Yes, it does. It makes for a good point where you say the central bank should diversify into gold in order to strengthen the reserves. And I mean, number one, you have to look at the fact that we do have gold in the ground. We can easily just extract the gold in the ground and you can sell it out there, and you can use that as a reserve. And it is very acceptable and generally and overall acceptable. And then if you're getting it out of the ground, then what it means is we are going to also be minimizing those import costs, and also be growing the domestic economy. So now that makes a case for actually expanding our reserves. And then also, if you look at the fact that mostly when we talk reserves as a country, it's usually the South African rands, they also fall into that. So you do need to have these non-liquid, which could be liquefied, to make sure that should we at any point in time be required to make huge international purchases, we can simply swap that gold and convert it into whatever vehicle currency that we need to then sell across the globe. And then also, I think one that is remaining salient, Notile, is when you look at the trends, I mean, you and I track these trends in this program every day. We've been doing this for the past 2 years. And if you track at the main factors that are contributing to this rally that we are seeing in the price of gold is we are seeing a lot of central banks, stockpiling gold in real terms, not gold as traded in the market, but they're all stockpiling gold. So that means there is a lot of movement that we may not necessarily be privy to right now, or there is a lot of those, stressors that central bankers are seeing, and then therefore everyone is stockpiling this gold, and that is why we have seen the price of gold skyrocketing, hitting record after record, only to settle at this $4,500 per ounce now. Now that's because they are in the risk matrix. When you look at the geopolitical tensions, you look at the trade wars, and you look at the shifts in the global in the global systems of production, they are all pointing to the fact that you do need to have gold in gold, because also when you're looking at the counterbalances that are coming on to against the dollar, for example, we are seeing the BRICS as a counterbalance, and we are seeing a lot of counterbalances. And if you look at the amount of transactions that have been completed and that have been completed in dollars, it keeps on declining over the years. So there is a need to be proactive and really think about where would we be if things were to change in the current monetary system. And gold is a good reserve to hold so that you are at a better place to move forward as we see those changes and those alterations in the global monetary system and the global banking system.
Briefly, Mrs. Bia, does gold generate interest income? Because if not, then I would ask, then what is the trade-off that the central bank is making here by allocating more of its reserves to gold?
So gold in itself does not generate interest income, but gold in itself is a very stable measure of what's it called? It holds value. It's a stable. It holds value in a more stable way. It's not that volatile, right? So if you hold in your gold, then you can always exchange it, and you're always at a better off position. And if you would think, the way gold is valued in the central bank's balance sheet is not the same way that gold is valued in the markets out there. So if you were to ask the governor and sit down with the governor today and say, those 2,500 ounces, how much do you think how much would you pay for those? You would find that if he wanted to buy those, he was not going to pay this $2,500, this $4,500 that we are talking about right now per ounce, but you'd find that it changes around 200. I think last we checked with the Feds in the US, in Treasury in the US, I think theirs is valued in their balance sheet at $195 overall. $195 overall. So when you're looking at what would potentially come, in the sense that you might see a revaluation of that gold. So if you hold that gold, the balance sheet of the central bank, as and when that revaluation comes, would actually explode, and it would actually put us at a better off of position. So if you do not have that gold, then we are not able to benefit from that revaluation. Actually, such economies will be made worse off. And I think this is one of the main reasons that most central banks are pushing towards holding gold in their reserves, because the signals are there that there might be shifts in the global monetary system, and one of those shifts may actually involve the revaluation of gold within the reserves, so that you just prop up the balance sheets.
Mr. Sibia, let's pause for now. We'll talk markets in a few. That was in-house economist analyst Sibia chiming in on the CBE's decision to buy gold locally to boost reserves. Our market analysis segment coming up after this. Right now, for our market analysis segment, in-house economist Sanele Sibia is still very much on the line. Mr. Sibia, it's day 98 of the conflict in Iran. Reports have it that there's been exchanges of new fire this morning, and 129 commercial ships were redirected away from Iranian ports. What does this tell us about markets at the moment, especially their concern over global trade flows?
Thank you, Notsile, and I think that's one of the main sticking points. And just to add on to that, if you follow the news, you'd see that Hezbollah is threatening to, halt all Israeli shipments that are moving through the Red Sea. So I think what markets are pricing in today is what is the likelihood of an escalation into other very critical, maritime routes in this conflict. And, it's been a ceasefire with a lot of fire. That's one of the things that has markets on edge. And overall, that is reflected throughout the entire market spectrum, from the US all the way through to South Africa. Everyone is reacting to this because, going into the end of week last week, we're hoping that we're probably going to get a ceasefire or a peace deal coming out. But what happened was we saw a lot of missiles being fired from Tehran into Tel Aviv, and we saw Tel Aviv firing into Lebanon and Lebanon back into Tel Aviv. So it's been a very hectic weekend within those fronts. So overall, when you look at market, you can see that the Dow Jones Industrial Average is down 695 points in today's trade. The Nasdaq Composite Index is down 1,121 points in today's trade, and the S&P 500 is down 200 points. So we're seeing all indices, just losing their record streaks, and now that is due to the fact that we are seeing the tensions coming back up, and we've also seen very positive or strong jobs numbers in the US. So now that brings about back inflation fears together with interest rate hike fears in the US. So that's what markets are trying to battle with and try to bring into frame. And then coming into London, we're seeing the London Stock Exchange basically just flatlining at 4.82 points, which is just a marginal upward movement there. But when you come into Germany, Frankfurt there is down 160.91 points. And Paris is down 31.75 points. So now that is largely due to the fact that the ceasefire is sending those jitters back into the market, and Brent crude is up above the $95 per barrel in today's trade. And now we know that there are those energy fears that we are seeing. And also, the longer that this war holds, then the longer the downward spiral is going to have to take. So I think markets are now factoring all of that in, and the more that we are seeing the headlines that are being drawn between the US and Tehran, where we've seen the US saying that they don't want the nuclear should be off the table, and we have Tehran saying no, we are going to do nuclear for civilian purposes. And then there's also the issue of Lebanon there, where the Tehran is saying we are not going to even begin talking of a peace deal until and unless Israel stops attacking Lebanon. So yeah, we are seeing a lot of red lines being drawn, and we are seeing that the distances remain a bit further apart. And then coming into the Asians, the Asian stock markets there, the Nikkei has lost 2,563 points in today's trade. Hong Kong has lost 304 points in today's trade, and and Beijing has lost 68.4 points in today's trade, which is all just in reaction to those fires that we are seeing flying in the skies of the Middle East. And coming into South Africa, the Johannesburg Stock Exchange has lost 614 points in today's trade, sitting at that 110,000 mark. No, that's not something. Those are the lows that we last saw, I think, pre the war. So now that just shows how vulnerable South Africa is to this war. Eswatini remains relatively stable. While we look into the commodities, gold has lost 46.9 points in today's trade, staying at $4,318.40 per ounce. And then Brent crude has inched up to $96.93 per barrel in today's trade, given those geopolitical dynamics that we are seeing there. And then in terms of the currencies, the Lilangeni is on an overall weaker position, but at midday, we saw the Lilangeni getting a bit of strength, coming down to 16.50 against the dollar. Yet earlier on in the session, it was trading at 16.60. And then we are coming down again against the euro, stronger against the euro, though still in a relatively weaker position. And same thing against the Japanese yen, still in a relatively weaker position, but just showing some signs of upward movements, largely because when these geopolitical tensions flare up, we tend to see currency swaps from those emerging economies to those in developed economies. Thank you, Notile.
Thank you very much, Mrs. Bia. A ceasefire with more fire is actually a fitting description to what we're seeing today. Otherwise, that was in-house economist Mrs. Bia coming through with some of the latest in markets. This has been the Monday edition of Market View. From myself and the team, let's meet again in the next edition. Bye-bye.